This video was brought to you by Brilliant. The European economy is having a tough time at the moment. Inflation remains stubbornly high, Eurozone growth is low, and individual European countries are slipping into recession. Across the pond in America, however, inflation is nearing its 2% target, unemployment is low, and the American economy is growing at twice the rate of Europe. And this disparity has sparked some anxious headlines in the European press about Europe's economic decline. So in this video, we thought we'd take a look at why the American economy is apparently doing so much better than Europe's, if that's really fair, and whether this is something that the EU should be worried about. Before we start, if you haven't already, please consider subscribing and ringing the bell to stay in the loop and be notified when we release new videos. So, let's start by taking a look at the US. While the US has seen an uptick in inflation recently, it's been much less dramatic than what's happened in the EU. While year-on-year inflation ticked up slightly in July, going from 3% to 3.2%, it's still way down from last year's high of 9.1%. And honestly, America isn't even miles away from the Federal Reserve's 2% target. On top of that, the American economy is growing remarkably fast. In the second quarter of 2023, the American economy grew at an annualized rate of 2.4%, and the IMF expects the US to be the best performing country in the G7. And this is particularly impressive, given that the Federal Reserve hiked interest rates to 5.5%, the highest level in 22 years. In theory, this ought to make it more expensive to borrow money, which should both bring down inflation, but also stunt growth. That's because less money means less economic activity, i.e. growth, which means less demand for stuff, and so, assuming supply stays constant, lower prices, i.e. less inflation. And that's what makes America's recovery so far so remarkable. Inflation has come down as expected, but growth has remained strong, which is sometimes known as a soft landing, when inflation comes down without crashing the economy into a recession. By contrast, Europe hasn't been quite so lucky, and European economies aren't looking as rosy at the moment. Eurozone inflation came in at 5.3% in July, well above the European Central Bank's 2% target, and markets don't expect it to reach that 2% anytime soon. Like the Federal Reserve in the US, the ECB has responded to high inflation by raising interest rates to a 23-year high. Unlike the US, however, these rate hikes have apparently damaged Europe's growth prospects. The Eurozone only narrowly avoided a recession at the beginning of this year, and while it returned to growth in the second quarter of this year, it grew at an annualized rate of just 1.2%. And lots of European countries have actually slipped into a recession. The Netherlands and Germany are now both in a recession, and things don't look good for Poland, Italy, or Greece, which all saw their economies contract in the last quarter. So why has the US done better than the EU on both growth and inflation? Well, let's start with inflation, where there are at least three reasons why the US has outperformed the EU. The first being the dollar. The dollar is the world's reserve currency, which means that in times of crisis, it goes up, because people see it as the world's safest currency. And this is exactly what happened a year ago when the dollar went from roughly 80 cents in 2021 to over €1 by the end of 2022. While the dollar has since receded from last year's heady highs, it's still worth 92 cents, well above the historical average. Anyway, a strong currency helps to bring down inflation because it makes imports cheaper, which is a big advantage for the dollar and, by extension, for America. The second reason is energy. One of the big drivers of inflation, especially in Europe, has been rising energy prices. But while energy prices did indeed rise in the US, they didn't rise anywhere near as much as they did in Europe, and they came down much faster. For context, energy prices accounted for at least half of all of Europe's inflation last year, but only about 20% of America's. Now, this is for a couple of obvious reasons, but the most obvious one is Europe's dependence on Russian hydrocarbon imports. Before the war, Russia accounted for about 40% of the EU's natural gas imports and about 25% of its oil imports. In fact, Europe was particularly reliant on pipeline gas from Russia, because much of the world's LNG had essentially been backseated by long-term contracts, and because Europe lacked the port infrastructure to receive significant amounts of LNG. This is why, when Putin cut off the gas, European gas prices went sky high, but American prices barely moved. For context, at the end of 2022, gas prices in Europe were literally 10 times higher than America. The third and final reason why European inflation is suffering more than American is because of food, which has been another big driver of European inflation. Going back to that chart from a minute ago, you can see that food accounts for something like 30% of European inflation, but only about 15% of American inflation. This is both because the EU had previously imported a fair amount of its food and fertilizer from Russia and Ukraine, which have obviously been affected by the war, but also because America produces more of its own food than Europe does. While Europe technically runs a trade surplus for food, exporting roughly $20 billion more than it imports, that's largely because it sells expensive food like wines and artisan cheeses. In terms of calories actually consumed, Europe is significantly more reliant on imports than America is. Europe imports about 22% of its calories, compared to about 7% in North America. In this light then, America and Europe have actually had different inflation problems. Europe's has mainly been about rising import and commodity prices, while America's has been more about internal dynamics, including its tight labor market due to the fact that a significant fraction of Americans still haven't returned to work post-pandemic. So that's why the US has done better on inflation than Europe has. But why has it also done better on growth? Well, it's in part because, with lower inflation, American consumers have more confidence and disposable income than their European counterparts. But it's also just part of a longer story that really begins in 2008. In 2008, the EU economy was actually a little bit bigger than America's, 16.2 trillion versus 14.7 trillion. By 2022, though, the US economy has grown to 25 trillion, whereas the EU and UK only account for 19.8. Now, those figures are perhaps unfairly flattering to America. When you take into account things like exchange rates, things do look a lot closer. And this is also in some part a function of the fact that Europeans choose to work fewer hours than their American counterparts. There's also an argument that American GDP is inflated by stuff like military spending and high-cap tech companies. Nonetheless, the point we're making is that America's overperformance in GDP isn't new, and we'd need another whole video to explain it fully. If you'd like that, then let us know in the comments below. But essentially, that's why the US has been struggling to recover a lot less than Europe. TLDR is all about independent journalism and using facts and data to back up our reporting. And we truly believe in the importance of this, and hopefully you do too. As such, we're brushing up on our data and analysis skills to make ourselves better reporters. And we're doing that on Brilliant. They're the STEM learning platform full of all kinds of courses which can help with improving your career and your understanding of the world. For instance, their hypothesis testing course allows us to better analyze claims and test our own assumptions and theories. Or the Predicting with Probability course helped us to better understand projections and forecasts, allowing us to identify when there's something weird going on with official projections. It's not just statistics though. The interactive and engaging courses over on Brilliant take you through all kinds of important topics, from the worlds of maths, data science, and computer science. Brilliant have also been a long-time supporter of the channel, so if you ever considered checking them out, we'd really appreciate it if you used our link. That way, they'll continue to support the channel, and perhaps more importantly for you, the first 200 people to click the link will get 20% off Brilliant's annual premium subscription. Thanks for watching, and thanks to Brilliant for supporting TLDR.